Hello friends, welcome to the Warrior series of BFM. In BFM Warrior series, we are covering the case studies plus MCQs, numericals, everything. Basically, all the PYQs we are covering. Now, case studies are related to your theory also, as well as your numericals also. Lots of case studies are there. Roughly 40 marks case studies are there in BFM. 40 marks means 5, 8, the 48 case studies. Out of these 8, roughly 4 to 5 are of numerical based and 3 are of roughly theory based. So case studies carry a lot of important. Forex is the main part in BFM. You'll get many 2 to 3 case studies on Forex. We are covering the same over here. Everything we are covering. Okay, watch complete series. Share it with your friends, like the video, subscribe to the channel, click on the bell icon. What will I be covering today? Today I will be covering mainly the Forex numerical. In fact, that is so big that it will take a lot of time. And I won't just give you the answer. Answer is very easy. I'll explain you the concept. Those concepts will be useful for you in any Forex numerical, any. Okay? So watch it till the end. On 1st June, a customer requests to book a forward contract for retirement of an import bill of USD 1 lakh. USD amount is 1 lakh. Due for payment on 15th September. See, the due for payment on 15th September. It is from your Macmillan book. Huh? So due for payment on 15th September. Given spot rates are USD INR is 75.2729. Forward premium is given as spot June 10-12, July 28-23, August 32-34, September 43-45, August to September. Now this is a bit tricky part. August to September means 15 September. It is 6-7. So for that 15 days also the forward points are given. Plus one more point, check this. Charge margin of 0.2% on the spot rate. Kindly remember. Try to solve this problem. This is a sure problem in your exam. Be sure about it. You'll be definitely getting this numerical in the exam. It's a big 5 marks case study. Okay? So let's start. Firstly, understand what is the case. Booking a forward contract for retirement of an import bill. Kindly note few points over here. First is import bill. Whenever you have import bill, you have to take the right side, this side. Number 1. Number 2, due for payment on 15th September. So it is in the mid of September, right? Then charge margin of 0.2% on the spot rate. Margin of 0.2%. Got it? So let's start. There are 2 twists in this problem. 2 twists. Which are the 2 twists? Number 1 is margin is to be charged on the spot rate. This is first twist. Generally, in any numerical, we charge the margin on the end rate which we get. End rate. But here the margin is to be charged on the spot rate. Number 1. Number 2 twist is August to 15 September forward rates are given. So when such thing is given, you cannot use buy low sell high concept over here. Whenever you have the exact rate, not to use buy low sell high. This is very important concept. Whenever you have an exact rate on certain date, any date, whenever you are having the exact rate, you should never ever use the buy low sell high concept. Never use it. Got it? So with keeping these two in mind, let's move ahead. And always remember 6-7 means what? There are 2 digits 0607. Now kindly note, we are focusing on import bill. So we'll be focusing everywhere on the right side, not the left side. See this. This is always buy, this is always sell. Okay, have I written it somewhere? Let me show you. See, whenever you have like this side is always buy and this side is always sell. Okay, so when now we are focusing on import. Import means sell. Import is always sell. Okay, and export is always buy. Export is always buy. So now we are focusing on import. So we'll be focusing on sell part. So everywhere you'll have to look at is sell part. Right side, right side, right side. No left side. So what are the 3 points which we should focus? One is right side. Second is margin on spot. Third is this August to 15 September. So let's start now. Move ahead. Say this. Let's say this date is anything. We don't know the date. Let's take it 1st June. This transaction is happening when? Forward rate. This forward transaction is happening when? September 15th. So I have to book the rate for September 15th. Okay? I have to book the rate for September 15th. Now, whenever I have to book the rate for September 15th, I'll have to see 2 parts. One is September 1, starting of the month and ending of the month. So, September 1, starting of the month. That month, don't focus on any other month. If you want September 15th, focus on September start, September end. Okay? So, here, September start, September end. So, what is the rate for September start? Now, one thing you note, if you look at the rates given over here, see these rates. Spot of June is given, July is given, August is given, and September is given. So, I want now September 1 rate. September 1. So, kindly note one point. Whenever you want beginning of any month, the rate is of the earlier month. Whenever you want beginning of any month, the rate is of the earlier month. Because when I say July rate, it means it's for the July end. When I say August rate, it means it is for the August end. When I say September rate, it means it is for the September end. Getting this? Okay, I'll ask you one question now. Suppose if I get a rate for November rate is given. So when will that November rate be applicable? At the beginning of November or at the end of November? Type in the comment section. Will it be at the beginning of November or will it be at the end of November? Where is it? Yes. Everyone, think over it. Just now I gave you the hint also. The whole idea I gave you. It is always at the end. Okay? End. Now one more question. Now suppose if I want, look at this only. Suppose if I want the rate for 1st of July. I want the rate for 1st of July. Which rate will I take? 1st of July. See this, June end is given, July end is given. But where is 1st of July? 1st of July will be earlier month. So June end will be equal to 1st of July rate. Pay attention everyone, very important part. June end will be equal to 1st of July rate. Okay? Now I'll ask you one question. I want the rate for September beginning. September beginning. So September beginning means what rate will it be? August end. Isn't it? August end. Look at it. September beginning. It will be August end. Right? So I'll take August end rate. What is August end rate? For that, what I have to do? Let's write the forward points. What are the forward points? So forward points over here, August end rate is 32.34. What do you mean by 32.34? Right side sell is 34 points. So it is taken to be taken in 0.34. Now is this currency in premium or discount? See, whenever you have right side bigger, this 34, whenever you have right side bigger, see, and show you over here also. Whenever if you have right side bigger, right bigger, right, okay, right bigger, big, this is small. Then you say the currency is in premium, okay? And whenever it's reverse, left side is bigger, right side is small. Then you say the currency is in discount. What is the advantage and what is the use of premium and discount? Whenever you have the currency in premium, pay attention, whenever you have the currency in premium, you have to add it to the spot rate. See this, you'll have to plus this, add it to the spot rate. Pay attention everyone. Whenever you have the currency in premium, you'll have to add it to the spot rate. Whenever you have the currency in discount, you have to subtract it from the spot rate. Very clear concept should be there in your mind. Okay? So now move on. With this, let's move on. So now look at it. August end rate I am having. What is the spot rate now? 75.29. How do you know the spot rate? See, it's given. USD spot is 75.2729. Okay. So take this 29. Why 27? Because 27 is for sale. For export. Buy. I want sell now. Import. So 75.29. Alright. So 75.29 plus 0.34. Why plus? Because just now I told you currency is in premium. So I'll be adding this 75.29 plus 0.34. Add these two. Add these two, everyone. You must get this answer as 75.63. Do it practically also. Everyone do it yourself. In exam, if you have practice on the calci, it's very easy. If you don't have practice on the calci, very difficult. Try this everyone. Practice on the calci, everyone. So it is 75.63. Okay. Now there is the twist which I told you. The twist is they have given the rate from August end to September 15th. So this is given to you. So this is what 07, right? 0607. Say this 67. So take this 7. Why? Because we are focusing always on this sell side, import. So do it 07. Now what will I do for this 07? Add or subtract? Again look at it. Is the currency in premium or discount? Say this 67. Right side is bigger. If right side is bigger, what does it mean? It means the currency is in premium. So again I'll add it. Right? Clear? So I'll add this now. See this 75.63 plus 0.07 plus. So what will I do now? Plus 0.07. So 75.70. 75.70. So what have I done up till now? I have completed the forward rate point. Forward rate, whatever is that, I have completed it. But there is still something remaining. That was a twist, right? Margin. Generally, now let me clarify this point. Generally, whenever we calculate the TT margin, this TT margin, in this problem, what is it given? Say this over here. Margin is to be calculated on the spot rate. It's clearly mentioned. Generally, we don't do this thing. We don't do it. Generally. Okay? Generally, what do? We calculate it on this last rate, 75.70. Generally, we calculate it for 75.70. Whatever you have achieved at the end, TT margin will be calculated on that end rate. But in this problem, it's specifically mentioned. Calculate the TT margin on the spot. So this is a spot. So 20%, sorry, 0.2%, okay, into spot. 20% is a huge amount. So 0.2%, 0.2%, so 0.2 divided by 100. Okay. So 0.2 upon 100 into 75.29. Multiply this. You will be getting it as 0.15. 0.15. Everyone try this. Everyone should try this. Everyone must know this. How to solve it? All of you should try this. Okay? So, 0.15. Right? 0.15, you got it? Now, what will you do with this 0.15? Will you add or subtract? Whenever you are selling anything, you have to add the TT margin. Whenever you are selling anything, you have to add the TT margin. Okay? Why add? While selling, why do we add? And while buying, we subtract it. Why do we add it while selling? Do you know? Okay, I'll give you a simple example. Suppose if you buy a fridge, a refrigerator at your home, you buy it from that showroom. That showroom guy will send some vehicle, right, to your home. The showroom guy will send a vehicle to your home. Some vehicle will be there. So what will that showroom guy tell you? See, the cost of the fridge is, let's say, 35,000. This carting guy, logistics person, will take from you around 500 rupees. So 35,000, this 500, he is adding it to it. Is he subtracting the carting charges? No, he is adding it. Why? Because he is selling. So always while selling, you will try to add whatever this expenses have been occurred. So this is an expense. Logic is simple in all the businesses. You do it refrigerator selling or you do it dollar selling. Expenses seller, the one who is selling it, will always try to add the expenses so that he doesn't have to bear it. If this is not added, then the TT expenses, the seller or the bank will have to bear it. Right? So that's why we always add it while selling. Now add it then. 75.70, you got this answer, plus 0.15. So it is 75.85. This much is the rate to be quoted to the customer. This much is the rate to be quoted to the customer for the import. Okay, for the import. So, suppose if I ask you, what is the amount? What is the amount? I'll be this, it will come. So, it is 75.85 into $1 lakh. Why 1 lakh? Because see this, $1 lakh are over here. Retirement of a USD, 1 lakh. Okay? Got it, everyone? Clear? Clear, everyone? So now, let's move on. Let's go for the revision. Some important parts of the over here in this numerical. Let's go for the revision of those. What are the important parts? See this. I'll write it over here. Okay? Let me write it over here because you must know these. It shouldn't happen that you forget it later. You must know all these. Okay? Let me bring in a new slide. Okay? See this. So what are the important points? Let's cover those. Okay? First one. Whenever you have to export, you will always sell. Okay? And reverse, I won't write the reverse thing now. If export is sell, then obviously import is buy. Clear? Whenever you have to do the export, you have to sell. Number one. Number two, forward margin. Forward. Okay? For forward points. You should use buy low, sell high when you don't know the rates in between. Whenever you have to do in between month, use buy low, sell high. BLSH, I'll write it. Buy low, sell high. If it is on the first date or the last date, no buy low, sell high. Clear? Number 3, same. Okay, I'll write under this only forward points. If your currency is in premium, then add the margin, add the forward margin, add. Okay, if your currency is in discount, then subtract. How it is in premium? How is it in premium? It will be in premium if the right side is bigger. That I told you. TT margin. Whenever you are selling, you should always add. Whenever you are buying, you should always subtract. Don't forget these basics. Join the paid classes. The new batches are starting just now, October 24th. Let me show you. Join the crash course immediately. This is a new batch. Okay. See, for that you'll have to download that 24/7 app without fail, because there you'll be getting 1% extra discount for downloading also. So you don't you want that 1% extra? So download it. It's available on both Google as well as Apple, both. Okay. So download it first, and then let me show you all these. See, firstly, crash course. Crash course is starting from 24th of August, as I told you. Mock test, e-books, online live classes, recorded sessions, everything. Mock tests are chapter wise also and full length also. Both. You can study you can check your knowledge chapter wise also. You can check your knowledge full length also as you go in the paper. Once you give this, the paper will be like a cakewalk for you. Similarly, ebooks are chapter wise. It's a huge thing. Okay. Online live classes, recordeds are also available. So what happens? Suppose if you are under pressure, bank pressure, boss is coming, some sales target, something is there, you can definitely skip the live class and watch the recorded ones. Join them ASAP. The discount offers I'll show you, but first let me show you the Mahapack. See, this Mahapack is one of the best tools for you. Best tools. Double validity offer. Double means double. Okay? Ek pe ek free. Isn't it? You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. Plus discount. Discount is there. 79 plus 1. See this. Discount offer is 79% plus 1%. See this. But never forget the code. Y432. Y432 code. This will give you the maximum discount. 79% discount plus 1% extra, 80%, plus double validity. But you'll ask me, sir, what is there in this Mahapack? Wait, 15 plus batches per subject. 15 plus. Free question bank for all the compulsory subjects. Free formula bank for all the compulsory subjects. 15 plus batches, formula bank, question bank. Now these question banks and these formula banks are delivered to your home physical. They are available as ebook also, and they are available as physical book also. Everything. Both the things are available over here. Mock test, as I told you already, mock tests are full length also, chapter wise also. Now imagine 15 plus batches. Even if you do the batch of, let's say, 5 batches, you see, because of bank pressures, you might be saying, sir, 15 kaun karega? Do 5. 5 times revision you will be having, 5 times. And you need not purchase any batch. Once you purchase this Mahapack, you need not purchase any batch. Use it is, okay? Join ASAP.